Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 7:58 p.m., almost 8 p.m. Eastern Standard Time, here on a cloudy evening on the New York City, New Jersey waterfront. This is a quick 15-minute, try to keep it within that time limit, strategic market forecast for the coming week. Session will be recorded, uploaded to the YouTube channel for free viewing. Do pass the word around that anyone can access the Clueless Day Trading YouTube channel to get some deep strategic insight into the realities of U.S. financial markets and forecasts on what is about to happen. So the topic of tonight's session is very simple. What's next? So let's start off with the premise that we know nothing. And the only thing that we can determine or predetermine before we go into this coming week and weeks is that we have these very tactical precision charts for us to follow. And these are guided roadmaps for all traders, investors, swing and day traders, and for anyone else who wants to profit from the volatility and the movements in U.S. financial markets. So let me start off with a couple of broad points. We have a very important week coming up. Our Commerce Secretary Wilbur Ross is currently flying back from China, where he was there over the weekend on some extremely critical trade negotiations. The headline that came out of China was that they are ready to retaliate hard and cut back on trade agreements with the U.S. if the U.S. goes ahead and imposes the tariffs that they have mentioned. Even on that news, we are seeing that futures are barely down. They were down about 5 or 6 points earlier on, and currently they're flat, about quarter of a percentage point or 0.25. So obviously there's something going on. They're actually up right now. So it's not always the headline news that comes out. It's the layers of hidden analysis and what we call game theory, where for a particular decision, there are multiple outcomes. So even though the headline that came out of China over the weekend after our Commerce Secretary met with Chinese officials, including the Premier of China, even after that tough line stance on the Chinese front, that they're ready to go ahead and break trade agreements with the U.S. if the United States goes ahead with imposing the tariffs that President Trump has mentioned quite a few times, futures are not reacting the way they should, which is heavy down. Can happen, but I'm just telling you what's happening right now. So that's number one. We also have the NAFTA talks that are ongoing. There's very tough talk. We have imposed duties on Canadian steel. We have imposed that very strongly over the past week, and strong reaction from the Canadians and the Europeans. However, President Trump is on his way to Canada this coming week. Sit down and talk. So you go figure. All right. We have the Organization of American States, that's South American, Central American countries, which are having their conference, their meeting in Washington, D.C. And we have the major players out of Latin America, Mexico being one of the most notable ones, who are going to be there. So beyond all the rhetoric, there is, in my opinion, a lot of under the table that we can't see, talks that are going on. And I believe the overall global trade framework will remain in place, even though there are going to be a very intricate game of poker that's being played by us, by the other parties involved. And there is no way to game it. I am a passionate student of international economics, global finance, and overall game theory aspect, which is figuring out the outcomes of what might happen beyond the headlines that you all see in the media, and try to figure out what's going on. Now, one of the ways I figure out, aside from my gut instinct and my so-called knowledge, as a passionate student of global politics and financial markets, the thing that we rely on most are these charts. And these are extremely precise if you can understand the messaging that's coming out of it. So on that note, I will push, as I always do, and give a very strong suggestion that serious traders review my videos that are out there, and also sign up for the advanced coaching sessions, which are extremely helpful in understanding the messaging that is coming out of these extremely precise charts that are produced prior to the events happening. The credibility of a market forecaster, a trader, an investor is not what explaining things after they've happened. The real strength and credibility and the value-added service at Clueless Day Trading is we explain things and we forecast things prior to them happening, before they happen, which is where the big money's made. As you all know, repeatedly, I've done that. Now, I can't be right every single 15 minutes or every single day. However, if you look at the overall track record, I would say a good 70 to 80% of the time, if not more, my forecasts have been correct 100% to an exact degree, and has produced some amazing performance results only for tactical traders who focus on my charts, use their own gut instincts, their own risk management techniques, position sizing on their trades, their discipline of holding on to things, long and short, primarily long at these points, because the markets are repeatedly bounced back from these very specified levels that you're seeing in front of you. And I highly recommend that all of you try to exercise that discipline. And many of you who cannot understand charts and the power of what I'm trying to message, even though I try to make it as simple as possible with these arrows, with the resistance, with the support lines, resistance lines, the different patterns and such, then I highly suggest that you sign up for those ACS sessions, which are very affordable. And I spend a lot of my precious family time working with many of you on those advanced coaching sessions, what we call ACS. On that note, let me skim through the charts. We're going to start off like we did last week. This is a 15-minute chart. This is the ultimate trader's roadmap who are looking to make money on an intraday basis or even on an intra-week basis. This shows you the volatility. This shows you exactly where the markets might fall. We might wake up tomorrow morning, as we have done many times, just twice in the past week. On Monday as well as on Wednesday. I'm sorry, Monday was a holiday. On Tuesday as well as on Thursday. And look what happened after that. Big drops. This was the Italian fallout. Big drops here. And this is where we landed up on Friday afternoon at the close. And Friday being the 1st of June. So it was pretty much right there. Right there. This is where we ended up on Friday afternoon. This is where we are right now. This is at Friday's closing. This is where we are right now. To me, this pattern is crystal clear. I can't tell you exactly on a 15-minute basis, based on this, where we might land up, but I know exactly where we might, if things move up, where they'll hit resistance, where they'll hit support, and if they break support, where they'll fall. And these things are all laid out very clear. Now, why is this critical? It's very simple, because this is what determines your happiness or your sadness based on the trades that you're doing. Now, not everyone is an active trader. Most of my members have full-time jobs. I understand that. But if you have a couple of hours of the day that you can watch the charts, or even during the day watch the charts based on my very timely real-time tweets that I post out on the real-time feed, literally every 15 minutes. No other service does that to that level. To walk people through this intense volatility and tell them what are the probabilities of what might happen. So based on that, this is your 15-minute chart. There's really not much to explain here. So far, what we're seeing is we have a large trading band, which is between 27.41, 27.36. First range of the band is this right there, 27.07, right? The next level is the 27.07 to the big wide climactic type of drop to 26.75. And you can see here, those are the two major levels here, just what I'm trying to explain, if I don't want to confuse anyone. We have 27.36, 27.41. Let's call it 27.40. These are the E-minis, 15 minutes, live as we see it. Futures are right now up about quarter point at 27.34. That's what you're seeing here. This will move up and down as I speak. And the next level, it's in two halves. This is the first part, 27.07 to 27.36. That's a wide range. That's 30 points. With a conversion of about 7 times each E-mini to the Dow Jones, that's 210 points right there. 210 points. The media goes crazy. Many of you retail emotional traders go crazy. Oh my God, 210 points. The world's falling apart. It's basically a algorithmic sequence right there. 30 points here from here to here. That's the first one. The second one is 27.07 on a wide range. And it's not that it happens every single day that we're dropping 200 points, but it happens quite a bit. So if we have a negative day tomorrow, expect 100 to 200 points on the Dow. And you know exactly every level that we have support and resistance. This is 27.20. That's the first support right there, the green line, where we broke out from. This was where we broke down from. This is where we broke out from on Friday. So, and then the second half, the next 50% quartile, if you want to use fancy words, is 27.07 to 26.75. So that's 32 points. That's also roughly 210 points. So we have a wide band of 400 points from here to here. And this is where the market overall on a weekly basis is trading. 400 points on the Dow. It's not the end of the world, but you need to be prepared so you can adjust your trades accordingly. Pattern-wise, what we are seeing here is a complex head and shoulders with multiple head and shoulders built into each of these ranges. This is the first range. This is the second one. And the wide one being right there. That's your head. The bullish engulfing candle reversal stage 1 that I called exactly to the dot, paid very, very handsomely in the range of 200 to 600% on the SPX to SPY calls for tactical traders. And so this is what we see. Then we came back and retested that range again on Thursday. But all we did was test these multiple, as I've shown repeatedly on my real-time feed, these multiple left shoulders, LS, and this is your right shoulder. Markets don't just randomly move. These algos and high-frequency trading programs don't know anything about fundamentals and all that stuff that everyone keeps on talking about. They move based on patterns, on breakouts, on levels, things that I show in my chart prior to them happening. So that's an invaluable resource that you guys have here at Clue to Say Trading. Okay, use it effectively, and you will lose less and make a heck of a lot more. You can win all the time, but net, if you win more than you lose, your account's moving forward. It can't move forward every single day. Maybe it can. There are multiple trades that we do in different sectors. You need one big mover to take care of any of the intraday losses you might have on the others. So, saying all that, we tested the right shoulder, and now this is your neckline. There are multiple necklines, right? When a head and shoulder breaks, when a head and shoulder goes like this and breaks out, that's your neckline. As you can see here, there are multiple necklines. There's one. This is the big one at 27.07 right there, right? And then in between, the patterns repeat themselves very, very often, and all within, and this being a zoomed in version of a 15-minute, each of these candles are 15 minutes, so you can see that they happen quite a bit. Saying all that, this is where we are right now. So the bottom line is real simple. If we break out of 27.41, we are going higher. So let's move on to the next chart, which is the 1 hour. The 1 hour chart is this. So this tells you that if we break out, this is cutting out more of the noise. There are lesser candles because there are 4 candles, 15-minute candles in every hour, right? 15 times 4 is 60. 60 minutes. 15 minutes times 4. So this is the 1 hour chart. So you can see this is more clear. I put some notations down, which I observe all the time. These are the points where retail emotional traders, what we call RET, are nowhere in sight. They're completely AWOL, missing in action, bunkers, SOA, diapers. You know what I'm talking about. They're just scared stiff, panic. They're not looking at the charts. They're not taking any position, even little positions. They are not respecting these long tail reversal hammers. They're not respecting these powerful bullish engulfing candle, which is another way of, this is a visual representation of a massive short squeeze about to begin. This is billions of dollars that went into the market when they started buying the market at around the 2675 level, right there. Okay, so they're nowhere in sight. The same thing happened here on Thursday, when we pulled back and retested all these left shoulders, right shoulders. Nowhere in sight. Well, guess what? The market took off. So congratulations to many of you who are exercising discipline of looking at my charts, understanding them to a certain degree, and being tactical. Putting a lid on your emotions is not easy business. It's very hard for me. It's very hard for a lot of other people because real money is in play. But if you don't practice that discipline, you're not going to go anywhere. And I keep on repeating that over and over again. My job is to motivate people, but not coddle them with their bad habits. That's my job, because that's what I tell myself. I've let go of trades a little bit too early, and I mentally slap myself for it. Sometimes physically I slap myself, like, what the heck did I do? But again, I am in most of the trades, and I am catching the big moves to a large degree. I have shown multiple trades that have gone up 30, 40, 50 points over the past couple of weeks, if not the past week. Look at Amazon, prime example. Look at Google. I don't have time here to go over individual stuff, but look at Google. Google's 1135. I called it at 1060. Charts are all laid out on the Twitter feed, so feel free to look at them. Act on them. Don't just look at them. This ain't a spectator sport. So saying all that, we had that big white consolidation channel. We went back into it, and this is where we are right now. These are actual futures, and you can see here that we have the upper end at 2737 and 2741. So let's look at the bigger picture of what might happen, and all the technicals are so far fine. This was a rising wedge. Rising wedges consolidate. I've explained that from day one. For all my ACS students, I have videos on the YouTube channel under new member introductory videos, that this is the part where traders just lose their head. They assume that no one's going to ever take profits. If I'm getting in at these levels, which we are, why in the heck am I not going to take profits at these levels when I can clearly see here that the gap's been filled? That shaded green box is a gap. You can see that. So why in the world am I not going to take profits? And that's exactly what happened. News comes out, blah, blah, blah. That's all the noise. That does have an effect on the on market movements. Big moves down. But the left shoulder never convincingly broke. It slipped below that. It went back and retested the breakout level of the 30th, the Fed meeting right there. Now, this is all old news for focused traders because I've explained on real-time basis on this stuff before it happened, before it came down here on the real-time Twitter feed. The breakout level was tested. There was a sharp hammer reversal. That's a hammer reversal. By now, all of you should know that. There is a fantastic video on basic chart pattern analysis and candlestick dynamics, 2 videos on my YouTube channel. Feel free to review them. And you should review them if you want to make money and stop losing and bleeding your portfolio. So here's your hammer reversal, and then this happened. Wasn't supposed to happen. That Friday was supposed to be a monster day. The jobs report was good, but the bad news was still up there. What was going on? There was no breakthrough on trade talks. In fact, there were more negative news on Friday on NAFTA talks, breaking down and stuff like that. Markets don't care. Markets want to go where they want to go, and then they'll drop from there. That's why tactical trading and technicals and the way I construct my charts are so critically important. So this is where we are right now on the hourly. So far, things are looking good. Upside will be engaged, and there will be selling there because that's where the selling started back on the 22nd, one of the phases of the selling, and that was at 27.41. So as SPX, SPY traders, the ones who trade that trade the indices, which are big money makers, you know where you should be, easing out. Let's take a look at the daily. The daily gives you a picture of where we might go if things break out of those 15 minutes and 1 hour. It's not rocket science. I've shown this repeatedly. You have to zoom. This is 2018, beginning of 2018. This was the big sell-off on December 29th. Everyone thought that's it, it's over. We went long at the end of the day, moderate positions. We woke up on the first day of trading on 2018, which I believe was the 2nd of January, and the futures were up 14 points. And this is what they did. The big wave 5 euphoric stage. This is what the chat room, like I keep on repeating, was just completely losing it, right? Wow, And wave 5 generally ends badly. I did mention that. Listen to my videos. This is how it ended. And since this happened, the average retail trader, retail emotional trader, is nowhere in sight. Literally. And it's okay. I don't measure the behavioral emotions of retail traders by the participation on the Clueless Day Trading website chat room. But believe me, I know behavioral game theory. I know how traders think. I know how humans think. It's fight or flight. Tactical traders fight based on charts. Retail emotional traders are always in a state of flight, as in panic and running on up markets and down markets. On up markets, they're like, could have, should have, why didn't I buy it? Oh my God, I could have brought my trading account much, back to level and made so much more. Big or small, doesn't matter. Big or small, doesn't matter. The could have, should have traders, basically, because of this intense volatility that we incurred in 2018. And as you can see, the volatility levels have diminished. This was the stuff that happened in February. This is what happened in March. These are wide. Now you can see here that we are moving between this 400-point range or 200-point range. Okay, and if we slip below that, that's another 200 points. So the standard deviation or the variation from the means and the levels have the oscillations. Let's put it this way: the oscillations of volatility have started to diminish, even though they're faster, quicker. You can see what's going on. Another way to look at it is we created a massive W, and now we're creating smaller ones. There you go. This is going to break out towards this level, which is 2,800 on a swing basis. Can happen. Can happen in the month of June. Or we'll break down, retest these levels again, move from here, and everything is clearly laid out on this wide, zoomed out version of the daily chart. You can clearly see here at this point. Oh, this is what I wanted to say. So if you want to look at this as a very large cup, this is your handle. So what the market is doing, created a very large cup through intense volatility, 600 to 1,000 points, and now we're moving sideways. We've been moving sideways since May, right there in a 200 plus, 300 plus band. So this is your, if you want to look at it, what this pattern looks like without these candles, this is what it looks like. There's your cup, and this is the trading range that we're trading in. Multiple stocks are making new highs. We have shown so many fantastic plays, techs being the strongest. Some of the biotech stocks are making new highs. You know the names. It's all there on my real-time feed. So this is what's going on, right? It's a very large cup from the beginning of 2018. This is the beginning of 2018. There's your euphoric stage, right? Then the cup, and within the cup, massive volatility. That's this. Then now we're moving between 2,700 and 2750, and the upper level of the pattern completion is 2800. So this is where we are right now. Now you have to keep an eye on the price, the bigger picture, and trade accordingly within the smaller framework. You don't have to watch the screen every 5 minutes. There have been multiple swing trades that have been given that have worked out exactly. Some of them have taken a couple of weeks, some of them take a couple of days. That's the length of the swing trades that we do. Some of them have taken a couple of months, few of them. There are multiple trades which have gone absolutely produced phenomenal results, 200, 300, 400 points in individual stocks. Chipotle as an example, Ulta Beauty, things like that, which have taken 2 or 3 months. But these are not years we're talking about. And the returns or ROI on those things are just phenomenal. So this is where we are right now. Really not much to explain. This is your large cup. This is where we are. This is your handle. We have slipped below that a few times, no question about it. Tested the 2700 level, 2681 level, but this is major support, which is your cup and handle. If the handle completely breaks down, you know where we can fall. There's a big gap here, the red line, 2620, 2640. Doesn't matter what stocks you trade. If we break this handle, you're going to lose money. And you have to act accordingly. You're going to go short with the SPY, SPX puts, VIX calls, things like that. Buy the ETFs, which profit from the market falling. The inverse ETFs. Or if the handle breaks out, which it generally does, then we are going to complete the pattern from where we are right now to 2800. Now, this handle right there, you're looking at the cup and the handle, will find incredible resistance, very fierce resistance at 2750, which is roughly about 100 points, 100 to 120 points from where we are right now on the Dow Jones Industrial Average. This is where we closed at. So from this level up here is roughly about 100 to 120 points. I can assure you there will be enough monkey on a hot tin roof retail emotional traders who are going to be excited, too excited about the market at around, or maybe they'll start to enter. Yeah, I feel comfortable. The three last words, I am comfortable. I am feeling comfortable. The three last most disastrous words a retail trader can ever tell themselves. By the time you're comfortable, you're done. You're comfortable to enter a trade, you're done. Because the algos will hit you so hard, your comfort will turn into absolute painful discomfort. And I've said that repeatedly. This is a game of constantly having positive stress. In other words, you always have to be a little stressed out. You always have to, and the perfect moments that I keep on saying are these levels. And recently these levels, where not a single soul is seen because they are not comfortable. You hear that in the media. I used to hear that a lot from my clients back on the days in Wall Street. I am not comfortable. Mr. Jones, by the time you're comfortable, you're not going to make any money because everybody around you is going to be comfortable. Retail traders were very comfortable here. Look what happened. Most of them were comfortable at this level. There was the largest inflow within a 1 month period of individual mom and pop money, retail money, individual money, mom and pop, that went into the market at that stage. And after that, they sweat off the market because they were comfortable. You got to buy discomfort. I know it's like the simplest things in life, but I can't seem to understand why so many retail traders don't want to accept that. You have to buy discomfort within reason. And that reason, or the quantification, or the basis for that reason, are tactical charts. If the tactical charts are not cooperating, then you don't want to enter long trades. And if they're not cooperating on the short side, I mean, you can see how the charts are constructed. You can short the market. But that's the way it is, okay? So at one point or another, we are going to get to 2,800. In the meantime, we shall see. If the trade stuff really blows up and we get into a full-scale trade war with European partners, with Mexico, with Canada, believe me, it's not going to be good. We know that. And we're going to fall to 2,500 so fast that the head's going to spin. It's going to be another one of this. and I'm prepared for it. And we're going to make a lot of money off that. The only way we're going to know that is not by listening to the news. Okay, of course you have to. I mean, I'm always connected to the news, but it's how you analyze the news. What is the reaction to that news? And the tactical charts are the only way. The clue to say trading tactical charts. You can't make these things up. You know how right I am with these charts. How you how you act on my charts is is going to determine your happiness or your sadness. Make money, you're happy. Lose money, you're sad. That's standard procedure. I know that. But these charts are the only ones which will give me the early warning signal, good or bad, what is about to happen. You can see here what's happening. This little move is roughly 100 to 120 points. Now, the other big event that's coming up is June 13th, the Federal Reserve meeting. Very critical. They're going to raise rates 1/4 percentage point, in my opinion. The markets are going to start getting nervous as we get towards the middle of June. Standard procedure. Then we'll see how the markets react. Once those rates are, if the markets sell off very hard before the Fed meeting, the Fed raises rates 1/4 percentage point, we're going to have an immediate rally. If the markets rally too hard into the Fed meeting, the Fed raises rates 1/4 percentage point, I can assure you, for at least a split couple of hours, if not a day, we're going to sell off hard. Raising rates 1/4 percentage point on the broader scheme of things does not really kill the economic growth in the US. They're just keeping up with what's going on. But the reaction, the algos will manipulate reactions. And if you're not prepared by following my charts and understanding what I'm trying to say, then you are going to be just run over, just decimated. So that's it, guys. I'm going to keep this short. Like I said, it's 8:30 p.m. I think it's half an hour that I'm doing this for. That's all. Have a great evening. God bless you all. Futures right now are up a point. Dow futures are up 18 points. NASDAQ futures are up 6 1/4. We have great ideas on the table, from text to biotech to individual other ideas. I wish you all well. Look forward to seeing you guys this week. Let's make it happen. God bless the USA.